Welcome to the Lender's Digest podcast, hosted by Jonathan Preston. So today, I want to talk about the upcoming fixed rate cliff, where we are expecting to see a lot of mortgages roll off fixed rates in the next 6 months. Generally, they're going to be rolling off by about October, November, so that is something that's coming up pretty quickly. I've actually thought about this quite a bit and have been discussing with a few people as well. One of my friends is actually quite a good investor, does think the cliff is real and thinks that we will see some properties come into the market as a result. I also have another friend who thinks it's priced in and that we're not going to see much effect at all. Personally, I also think it will have some effect, but my feeling is that it is going to be a bit more area dependent. And so what I mean by that is I think some areas where people are more aware of their financial position are also more likely to be aware of the upcoming repayment hike and have likely saved money in advance or have potentially changed their circumstances already or are at least very close to making changes now. One also has to consider that families with children are going to be very reluctant to move out of the family home and move into a rental because this is also going to disrupt schooling. And so I think that if families have a choice, they're going to choose to reduce their other lifestyle costs and make new sacrifices just to maintain the family home. And those families, however, that are already on the edge, this might be what actually tips them over and they may have to sell. So I do think that some properties will come to market, but certainly I don't think that a family's first reaction is to actually sell the family home. I just don't think people really want to go back to the rental market in the current state of things. So I've been hearing for some time about people actually selling their investment properties, however, and I think that this trend is going to continue. I've heard from some real estate agents that they're actually concerned that their client lists are reducing because all the investors are actually selling their properties off and so they don't have much left to manage. And I think that's really just a result of the repayments being so much higher compared to the repayments of before and relative to rental incomes. So as people sell their investment properties, most of the buyers today are actually buying for owner-occupied purposes. And so a lot of the buyers of these properties, I believe, are going to be less likely to actually sell in the coming months or years because the last thing they want to do is turn around and go back to the rental market. Now, the thing to note about people selling investment properties is that investment properties tend to be at lower price points. So people tend to extend themselves much more to buy a family home, whereas for investment properties, people tend to look more for sort of value or hotspot or upcoming areas, if you will, and those tend to be generally at much lower price points. And again, so I think this again points to more pressure being in places where property, is less expensive. And the higher end of the market, I think, is being propped up by stock shortages. And even though we've seen fixed rates starting to run off already, we haven't really seen a spike in listings, at least not in a lot of the areas of Sydney that I'm currently looking at. And another factor to note here is that a number of countries recently had the stamp duty surcharge waived. So now people from those countries only need to pay the normal stamp duty like a local, and that includes Kiwis and Indians, which are big migration groups these days. And so there is potentially some further ongoing demand that is actually being added to the market from people that have moved here recently. People on work visas can actually borrow up to 90% from a bank. So the financing ability exists, and with that stamp duty surcharge gone, that can really open up a big market there. Now, additionally, when it comes to freestanding homes, which tend to be a bit more of the properties looked at in the higher value price points, a lot of those have been turned into duplexes or are being consolidated into unit blocks, which is a trend I think that will continue as we need more properties. And so a lot of the houses that people want to actually buy, the overall supply of them is actually reducing, in addition to demand actually increasing with more people migrating to Australia. So the question remains, will we see a big fall in prices? And I think that's really the real question. And my thinking is probably not. I think it's going to, again, be area dependent. Areas that are on the lower socioeconomic side may struggle more, where people don't have as much control over their income. And, they were just scraping by to begin with. I think a lot of these people are sadly going to struggle, and some of those properties will sell. But people who have more control of their income and financial position likely, I think, have made steps already to plan for this, and so I think it is partially priced in. I think it seems like people are starting to lose patience with waiting and are starting to want to buy again, and that's where we've seen the recent spike up in prices. But if borrowing power does continue to drop as rates go up, we might see it become more and more difficult for people to borrow much, and so perhaps demand will wane as a result of that. Now, on a side note, the GDP data this week for March was not strong. So the next quarter, there's likely going to be a negative GDP print for June. That's based on the recent spending data and everything being much lower. And then if we get two of those in a row, which would, I guess, be released potentially around the end of the September quarter, then we would officially be in recession later this year. So that would be encouraging news for the RBA in their fight against inflation. If you enjoyed the show, please follow me on Apple, Spotify, or wherever you listen to your podcasts. It would mean a lot to me if you left a 5-star review on whichever platform you're on, and I really appreciate you tuning in as always. Thank you.